over the next 6 to 12 months, from a myopic standpoint, I mean, I think volatility picks up. I think economy slows, as it was projected even prior to this year, right? And you've seen it in the jobs numbers just on Friday. However, when you think 2-3 years out or longer, with AI and the spend in AI, productivity enhancement, and you see the permanence of the tax cuts, the benefit to business owners now have clarity on taxes. You could depreciate 100% of equipment, and all the onshoring that we're going to see in the spending of $1 to $2 trillion or more. And then eventually we're going to get the Fed will have to cut. All of that will be additive to the overall economy. So that's all pro-growth policies that I believe will see that really do well and perform well with our economy.
That being said, you've got a solid position in gold. Talk to us about your gold call, because man, that's been, it hasn't been a hedge. It's been a way to generate some big returns.
You know, it's really funny. So I started my firm just over 5.5 years ago, and when I look at all the asset classes and the performance of the asset classes, gold is my best performer.
Wow.
14.5% on average, right? So when we looked at gold, we said gold is a great hedge against a downward market. And that's essentially what it did when markets really declined rapidly. And we looked at research going back 80 years. So that's why we have gold as kind of a core in our portfolio. So, but recently, you know, what we did is we took some chips off the table and we started adding to Bitcoin.
Ah, I see.
Ooh, well, Tom's not here, so you can say that. Well, when you're thinking about the direction of interest rates too, in that September, mid-September decision that's going to come up, obviously we have Jackson Hole in between now and then. That'll be August 22nd. What are you expecting to hear from Fed Chair Powell then? Because we still have another CPI report later this month before his speech then.
I think the Fed is making a really big mistake holding off on cutting rates, even 25 basis points. I don't understand what the big deal is in doing something like that, right? Because if you're cutting rates, you could always increase rates if inflation's a problem. He got it wrong coming into this back in 22 before increasing rates. And what makes you think he's going to get it right this time by holding off until you see inflation become an issue, which is really debatable amongst many economists today, right? I personally don't believe it's going to be a big inflation problem. So I think the Fed should really move forward, cut rates, and stabilize the housing market, because that's a problem, right? As, you know, ownership of homes today and affordability is at all-time lows. So we got to fix that problem. And I think cutting rates is the start to that.